Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 10th. My name's Eric Wilkinson, and yes, you may recognize me as the Wolfman, maybe without the glasses on mainstream media. But what I'm here to do is teach you how to not only build an option strategy, but how to implement that option strategy. Because those strategies have different environments, different timing that need to be taken into account before putting that in your portfolio. And that's exactly what I try to teach you in these webinars and daily market commentaries. A little bit more in the webinars. I try to briefly go over them a little bit in the daily market commentaries. I don't really have enough time to go over every single strategy I do and all of the rules that go in around that. Kind of expect you at this point to have watched some of those and are following along with that. Anyway, without further ado, let's get on with economic data across the pond. Out of Great Britain, we got a plethora of economic data there and here in the United States, basically. A lot of things going on. Let's talk about the economic data right now. We got Great Britain's GDP month over month coming in at negative 0.1%, expected to be unchanged. Last month's number was revised from 0.3 up to 0.4, not really making up for a whole lot of that negative value. That's really going to be the headline number. People are going to see negative and not really look at the revisions. And then we got manufacturing production, again bad, came in at negative 0.7%, expected to be a positive 0.1%, and last month's number again revised up from 0.3 to 0.4%. Construction output 0.2%. That was expected to actually be negative 0.4%, so that's a good thing. And then we also revised last month's number up quite a bit from 0.5% to 1.8%. That is a nice revision. Good to see there, because that was a bit of a bummer to see there last month. And then industrial production came in at negative 0.6%, expected to be unchanged. So a bit of a flip there. We got construction spending ramping up, but industrial production, which is really going to be driving the economy, as a negative 0.6%, no revision to last month's number. And then they also have their ECB monetary policy meeting notes coming out. We had ours last month, and there was quite a bit of division across the board there. All right, here back in the United States, we got CPI, which is Consumer Price Index, coming in at unchanged, expected to be a positive 0.1%, and core CPI, Consumer Price Index, came in at 0.1%, expected to be 0.2%. And remember that core CPI, Consumer Price Index, strips out the food and energy aspect of that number, because that can be a little bit more volatile, and we want to kind of strip that out so that we can see how the overall picture is looking. And then we got unemployment claims coming in at 210,000, which is lower than the expected 215,000. The thought process there is if lower people are claiming unemployment, that means that they are employed. But remember, that number is a little bit wanky, because if you stop filing for unemployment, you are no longer part of the statistics. All right, and then natural gas storage is coming in at 98 billion cubic feet, expected to be 95 billion cubic feet, and we have a bond auction later on today. Doesn't seem like we have any Fed governors speaking. It looks like they've gotten that all out of their system ahead of the FOMC coming up here relatively soon. All right, so let's talk about crude oil inventories, or crude oil, not the inventories. We've already gotten that, what was it, yesterday with that build. But we're still seeing a push higher in crude oil. It's in line with what I've been talking about. You guys, some of this stuff on the headline news, you got to kind of, realize that what they're trying to do is they're trying to drive viewership a lot of times, right? So they're talking doom and gloom and everything else. And that's why these trade talks with China are like really throwing monkey wrenches into the equities. But what we can see here is we've got crude oil still trudging along in and around this area here. I expect it to kind of stay in line with the 50 to 55-ish area, build in some of this volume in and around this area, which is what it looks like it's starting to do. Something to note here, we do have a time node here where that's where the most time and volume has been spent, or time's been spent, I should say, but the volume has been up here at around 56. That's where people have really been exchanging price. We're just kind of watching the price here in and around $53 a barrel. So that's why another reason why I expect the markets to kind of start to fill in this area right in between and create a volume node somewhere in and around this area there. So it's going to take a little bit of time to work that all out, but that's what I kind of expect going forward for crude oil. Now, gold coming off a little bit and back below that $1,500 a troy ounce mark. That is the psychological level we've talked about here, and I do expect it to kind of stay in there. We might break below into the 499, as you can see, 1499, as you can see here, but I do expect that gold starts traveling a little bit higher. I think that we're going to kind of tick up a little bit and maybe even test this Fibonacci, the 161 extension that I've had on there for several months now. As a matter of fact, almost since the beginning of the year. And as you can see, that kind of comes into fruition when, you know, most people talk about Fibonacci. It has a tendency to come to fruition. And I do expect gold to start cruising higher as these Fed governors consider lowering interest rate, maybe even a little bit of quantitative easing. If they do the quantitative easing, that will hurt the dollar. And if we devalue the dollar, then that should cause equity or assets like gold to start moving higher. I don't have any real trades on other than GDXJ. If you guys remember, I'm playing that to the upside, and it isn't quite at 50% of max profit right now. It's trading around 34. You know that I've been trying to get out of my November 34 puts right now, and I originally sold those for 65 cents, and right now they're trading 35-ish, 34, 35. So I need a little bit more to go down in order to get out of those for 50% of my max profit, but I will be working an order in that trade there. The directional move today hurting a little bit, but as you can see, when we set these up, we're setting those strategies up where we sell premium in an environment where we have high implied volatility. Well, that volatility coming out will help me even if I'm directionally wrong. So I've got a lot of things on my side with this trade. Only 36 days left in that trade, and we're going to really start to see a theta component, which is the thief in the night that comes and steals our premium. Well, when we're premium selling, we want them to take all that premium, right? So that all of those things is how we set these strategies up for success. Now, bonds, they are moving lower, which is a bit surprising to me. Over 1.5 lower on the day, back into the value area. You know, we get extended above these value area high, we start losing a little bit of momentum. I do expect this to stay a little bit higher. We still have higher highs and higher lows after this little bit of a bounce here, but I do expect bonds to start continuing to trudge a little bit higher, because I think the overarching theme here is that the Fed is going to lower interest rates. One of the crux of that is whether it's going to be a 50 basis point cut or a 25 basis point cut. I think if they're really worried, it would be a 50 basis point cut, but I think that they might be leaning towards a 25 basis point cut. All right, we've got VIX coming off after earlier this morning was spiking higher. Yeah, it looks like the Dow Jones Industrial Average is having a great day, up 200 points, but this is the index. It doesn't show the overnight trade. So with NASDAQ, if you can, I'll try and zoom in on this a little bit before I pull up my little marker here, but you can see overnight we had a spike down quite a bit. That was due to all of this rhetoric and everything else going on in and around China. You can see the low was 75.83, which was almost a 200 points lower than we currently are, with the Dow or the NASDAQ up 78, and that was almost 200 points lower just overnight. And that was when China was saying they were going to walk away from the table, and then all of a sudden this morning they've got a change of heart and are back at the table. Again, here we can see the E-mini S&Ps. The low was 28.81. We're at 29.45, so you can see that's about 65, that's a little bit, about 65 points higher. Nice big move in the E-mini S&Ps. Came down, touched the point of control, and then bounced up and away from that. One thing to note with that NASDAQ trade, or the NASDAQ, was it is trying to pierce above the 78 Fibonacci that I have here, and that has acted as resistance, as you can see there. A settlement above that would be a pretty nice coup for the bulls. That would make us want to come up and test this value area high here. And I don't know if we're really going to pierce above that anytime soon and test those all-time highs, where I was thinking, back in this area, I thought we were going to make that move. We've kind of rolled over a little bit, but we are starting to come back as the 61 Fibonacci here and that 74.50 area really acted as support. Now I think that we're starting to move higher, and a settlement above that Fibonacci would be good for the bulls on that trade. And then E-mini S&Ps, back to that, we saw that. I don't know if we're going to have enough momentum to get above 29.56, which is lining up with my Fibonacci there. This is what I was talking about overnight. As soon as the markets open and basically China was talking about walking away from the table, you can see we got slammed, and the market recovered a little bit as overnight inventory flushed themselves out. It was, sell the news, and then basically everybody came back in to cover those trades, and then all of a sudden, yes, they are coming back to the table. It looks like something could happen before the weekend, and the market started celebrating that almost unabated to the upside throughout the rest of the day. So mostly bullish feeling in the markets right now. But again, if anything happens with China, it is going to come off, and there is a lot going on with this China thing. It's not just the NBA. It's not just the tariffs. It is actually, they are starting to take off the kid gloves and talking about not allowing certain companies to participate in one another's economies. So that could really start to spin the wheels on this whole trade negotiations and everything else. It could get ugly quick. So having said that, I'm not really playing this. I'm still waiting, trying to wait on the sidelines, but I just couldn't help myself today. I was just like, I've got to do something. So I did it small in ULTA, and I decided to go in and put in, I don't know where ULTA is going to go, but it's right there at the point of control. We've got some high implied volatility percent. I think the IV percent here is right around 51, 52. That's about where we talk about premium selling strategies. Actually, it's 54. So that's premium selling strategies. They don't have earnings in this cycle that I'm going to be looking at, which is in the November. So I'm looking at the November, and I did a iron butterfly in here. So, I just did the strangle. I was looking at the iron butterfly, or the iron condor, the iron butterfly, the short butterfly, everything along those lines. But I decided to go in with the short strangle, which is a highest probability strategy around. Basically, you don't quite as get the big bang on your premium as you would with the straddle, but I wanted to get myself pretty far away from where we are currently trading, because anything can happen. But I think ULTA is going to be one of those that can stay away from all of this trade negotiation and everything else. So I decided to go in, like I said, to the November, and I sold the 210 puts along with the 275 calls in there, and I collected almost $3, $2.90 for that. I went a little bit further out. Usually I talk about doing the 16 delta on those. I went out basically to the 12 delta. I gave myself a little bit more room because you get a lot of premium for this strategy, and it also allows me to get above this Fibonacci here. We've got a tweezer bottom in and around that way, and you can see barely the 210 puts would be tested way down there. So I'm able to have a lot of room between there and there to be wrong, and we are currently right at the point of control. So I decided to go with that. Like I said, those are the 275 calls and the 210 puts for a total of $2.90 on that trade. So my break even to the calls is 277. My break even to the downside is somewhere around 207 on the breakdown there. But I've got a couple of tweezers there, so I think that that's shown solid support with no other real news coming out. I think that we will kind of hang in and around this point of control where the volume is. That's where the the volume has been transacted. That's where people have put their money where their mouth is, all right? So that's all I got for you guys today. Check out today's webinar. Actually, I do have some more for you. The webinar today is going to be on the poor man's covered put. This is going to be a synthetic short with a little bit of taking that risk off of the trade, and I'll show you how to build that up, what kind of environment to implement that in, what duration you need to be focused on for this trade, and all of that stuff will be covered in that webinar that I don't have quite enough time to do today. All right, so if you can't take that, take it easy.